Welcome everyone. We have Prashant Tandon from 1MG, which is now part of the Tata Digital. And even though the theme of our session today is, scaling the business with a strategic investor, we would like to start with, how it was for you to build not just one, but two businesses actually with VCs. And how did it go all these years before Tata's came in? And then we can...
Sure. I think the journey started 2011 with HealthCart and built it with a bunch of very high quality VCs. And then 1MG also, the first phase of the journey was very much with institutional capital from venture capitalists and private equity. And I think it's a very important part of the ecosystem because that kind of mindset, that kind of risk capital is extremely important to try out a lot of different things, different ideas,
Right.
Because that journey is so much about iterating with ideas and seeing what really sticks. And it's, I would say, a little bit different journey than with a strategic partner when what you are building is a lot more clear. With VCs, it's much more directionally here we are going, we'll figure out the way, and they are tuned to that, you are tuned to that, and the journey is about figuring out where exactly is your product market fit, where exactly you're going to build your business. That part really, I think, is a positive ecosystem of VCs that helps you to try out so many different things because both of you are thinking it in that direction. So yeah, I had a great experience with working with a lot of good VCs out there, pitched to pretty much every VC out there. You understand what they are thinking about, how they are looking at the world, how they are seeing the trends change, how your role in the ecosystem is evolving. So you get a lot of perspective on how to position your own business in that ecosystem. And frankly, what you are trying in the early part is just trying to figure out what exactly is the product market fit, what is the market opportunity, are you getting to a position where the ecosystem starts consolidating. In the beginning, even with HealthCart, we had like 20 companies trying online health stores. And that over a period of a few years filters down to 1, 2, 3 players. And then you need to navigate that ecosystem as to what will make you that one player that survives at the end of this. And so I think learned a lot about that part of the journey. And then, of course, 2021 at 1MG, the Tata Group came as a strategic partner and a new journey began.
Yeah, so before we get to that, even I think a lot of people don't know as much about the HealthCart and 1MG journey. At what point did you decide that, you've been spending more time on 1MG? And as you said, competition has always been there in both businesses. So if you can take us through that.
Yeah, sure. So see, 2012 is when we started HealthCart Plus in HealthCart,
Right.
which today is what 1MG was. So it was launched as a health content platform around medicines. Just a database of all the medicines sold in India, what they do, what they don't do, generics, price comparison, things like that. It was an information platform more than anything else. And it just took a life of its own. It started getting a lot of traction. It went viral in the ecosystem. People started sharing it with each other that this is a great app, never buy medicines till you look it up on HealthCart Plus. And before we knew, it became the most used health app in the country. And just to give you context, sometime in 2014, we had the second largest health app in the country was probably HealthCart with 50,000 downloads, early stages of the app ecosystem. But at that time, this thing called HealthCart Plus had already raised to 1.5 million downloads without a penny spent on marketing, without any specific push to to the platform, and we were like, something special is happening in the ecosystem. Consumers are seeking transparency. Consumers are seeking their healthcare to be more understandable for them. They are going all over internet looking for information, and they are finding the information we are giving useful. And a lot of what we came, actually when we came from the US, the idea was the healthcare ecosystem would get digitized over a period of time, and we might have an opportunity and a role to play there. And we started with a doctor-centric platform. With HealthCart, we moved to patient-centric, but then when this thing took off, we felt that all the digitization of this ecosystem that we visualized earlier, maybe HealthCart Plus would be the vehicle to do that, and instead of doctor at the center, patient at the center would be the model to do it with. Then in 2014, there was this big debate as to, is this a part of the same organization, or is this an organization in its own right? And I think when we went to a lot of VCs and private equity at that time, one thing became very clear, that these are evolving as two very different businesses by themselves. And in fact, we had a lot of interesting conversations where some VCs said, we really like the team, we like overall what you guys are doing, but these two different things are very hard to put together for us. Pick anyone and we'll fund it, shut the other down. And we felt both of these things have tremendous value, and we had the luxury, I would say, of a very strong and stable leadership team, that if I would devote my entire time and build out what HealthCart Plus could become as an independent platform, the other part of the business, HealthCart, had a very strong and stable leadership in Samir and the rest of the folks driving it. It won't really rock the boat in that sense. So we had that luxury that we could take a step out, give a full life to this interesting thing that we were seeing, and see where it goes. So Samir and I, of course, were very excited by the opportunity and thought of that, yeah, let's think about doing it that way. But one of the key reasons was it was a very different capital allocation structure otherwise. One was a Series A business, the other was a Series D business. One was a digital health business, the other was, at that point, it had started to evolve into a D2C consumer brand before D2C as a term was getting popular. And we knew that the type of capital, the type of risk appetite, the kind of resource allocation that both of these need will be very different. And thankfully for us, our investors were very supportive and aligned. They also could see that, okay, yes, these are things that can have good value in their own right. And we have a team that can actually manage these separately and independently. So that's kind of how it happened.
So now coming to 2021, when the big acquisition happened with Tata Digital, how did it go? Did Chandra call you? What did he tell you?
No, sir. At that time, we were actually closing a round with financial investors. We were very close to signing. But when the Tata Group came for the conversation, to us, one thing was very clear, that the way the market structure is evolving, it's going to be a space where a lot of large players are going to be playing, and all of them have long-term strategic capital. So we had two options. Either we keep raising year after year and keep playing the market as it comes, or we find whoever is the right partner for us. And at that time, one thing that had always been in my mind, and that why is the Tata Group not in the business of healthcare? Because by far it is the most trusted brand in the country, and healthcare is a business that is built on trust. And to me, it always felt like a very natural business for a group like that, that the new age model of healthcare and a trusted model of healthcare is something that an association with the group can really make happen. The other thing going on in mind was I had been in the startup build journey for a decade, really wanted to have a shot at building what should be the most impactful healthcare company of the country. And I thought with a partner like Tata that dreams becomes actually a much more viable reality. And whatever we visualized, because see, healthcare, unlike a lot of other sectors, requires a lot of long-term work and investment. Results don't happen in a short enough frame, and the VC journey requires you to optimize fundraise to fundraise, because obviously the first thing for any startup is do not die. So you have to optimize for the markets, and you have to make sure your business is positioned accordingly. With a strategic, you can take a very different view that, okay, I am building over the next 5 years, put my head down and keep executing. I don't need to worry about markets going up, down, this, that. And I think that's very liberating and very important for a business like healthcare. And personally, I was in that frame of mind that I want to now make sure that from here I build what is going to be the defining business in healthcare for the country. I felt a partner like Tata was perfect for that. And yes, the entire leadership of the group, we had very good conversations. The key thing here is working with the strategic is, are you aligned in mindset and approach? And in this case, that was very, very true.
So now it's more than 2 years since the deal happened. Do you miss the startup part of it, like moving fast, taking actions, not waiting for longer procedures? Is that something? How has that worked out so far?
See, I think it's been great for the business. And I think I am at a stage also personally where I am looking for building a large organization and business right now. Yes, the startup journey is heady, it's very exciting, it's a different pace, and having said that, from an operating perspective, actually not too much has changed. We still operate the way we did, our teams are the same, we are taking decisions the way we did. What has changed, and I think for the better, is we have a very, very strong sense of governance. We operate with all those. So I think we operate like a grown-up company, probably a little earlier than otherwise we would have, but the systems, processes, governance are really, I think, multiples higher than what it was earlier, and it's actually a good thing. We have to get to that stage. And the other part is, of course, that you don't have the need to be fundraising at any point. You can choose to do that, but you don't need to do that.
But tell me, how did you feel? Like 2021 was also one time where some of your biggest rivals were raising money. I think 3-4 rounds they raised, valuations went up like anything. And there was a view that 1mg was still not being, it was not a unicorn then even. How did you sort of deal with that?
Yeah, that phase was very interesting, that we could see there was a lot of craziness in the market. Clearly, the valuations had gone way ahead of reality, and we did wonder that when is it the new normal, or have we missed that boat or what? But I think there's one part of it that being there for more than a decade and a half almost now, we've seen enough of these cycles. This cycle went higher than the previous cycles, but we have seen those phases, and there's just big swings in either direction. But at the end of it, what the learning has been at both Healthcart and 1mg, that at the end of it, compounding, increasing your value, keep growing, that's kind of the model that works for us. We've never, even historically, we always felt we missed the craziness somehow. And so we never got the absurd valuations and way ahead of the business kind of prices. But in the long run, it seems to even itself out pretty well, because if you compound it appropriately, then because see, it's not a short-term thing unless you are looking for a quick get to a one number and then it is somebody else's problem. But I think if you are building a business that all your stakeholders, your team members, your investors, you yourself, everybody has to do well over a long term of time, then you have to take these things in your stride and be okay with what you get at that time. Is that a fair zone? And we always felt that at least there is the full satisfaction that we gave healthy returns to all our investors and all our stakeholders, because if someone comes at a huge price, the expectations are also set accordingly, and then so far we have not had a situation where anyone has not done well being part of our business. So, and I would like it to be so. So you see the froth, you wonder, but beyond that, what can you do anyway? So
right.
we were wondering, I wouldn't say we were not, but we felt that anyway, these games have to end at some point.
How was it like? I think both Flipkart, Amazon have been trying to get into the space and are allocating capital. How has it been to sort of compete with them, given that they were always standalone players, but now you're also part of a conglomerate?
Yeah, so I think we've been fortunate that this is a category that has its very distinctive buying behavior and also distinctive place in the consumer's mind. And that's very important, because if it were a category that would fall in the straight playbook of a horizontal, then it would be very hard to compete. Having said that, because of the one huge challenges in the ecosystem as a result of which the horizontals looked at it late, and the second part is that the buying behavior is completely different, and optimizing for that, building your business that caters to your consumer, it takes a lot of domain expertise. And we had built that, and if you keep building value enough, you see things compound over a period of time. And now that we are in a situation where I think, touch wood, we are doing well, we are leading the market in the spaces we operate, we are very much the brand that comes to the consumer's mind in the space we operate. And the crazy phase of hyper discounting seems to be subsided for now. I think that makes the business look in a very, very good shape right now.
So even that brings to the broader theme of our event today, and even at Tata Digital, there is a focus, there is a mandate for profitability. How does that looking for? How is that looking for 1MG? Are you close to profitability?
Absolutely, I think no doubt about it. And that's the best thing about these phases. And again, last decade plus in the ecosystem, these phases they come and go. It's just that the scale of the up and the scale of down keeps increasing with every cycle, it seems. But these are the phases when companies get built, when and it's a cost of capital situation. When capital is available, you invest aggressively in growth. What that means is your teams, your technology, your systems, processes, everyone optimizes for growth. When the cost of capital goes up, capital becomes more expensive, same teams, same technology work on automation and efficiency. And to build a business, you need to balance these two things properly. And in some ways, the ecosystem helps you correct all those focuses. So now everything is about, yes, there's a lot of efficiency to be driven across the ecosystem. There's a lot of opportunity to build the fundamentals of the business and get to profitability. So a bunch of lines of our business today are EBITDA profitable. A bunch of lines will be EBITDA profitable pretty soon. So I think the focus is clear, the intent is clear. And anyway, the business, the purpose it has to be sustainable. There's no reason or need to be in business if it is perpetually going to lose money. If you are creating a value, at some point you need to command a share of that value that you are creating. So I think that part is happening, and this phase is brilliant for the ecosystem.
So how does the FY24 year look to you? Like, if you're saying a couple of businesses are already a bit profitable.
So I think we have strengthened our market share across every category materially, and while doing that, we have improved our profitability across every business line. As I said, now most of the business lines are EBITDA positive. We've got the investment actively happening for our new initiatives. The existing lines, overall the entire business is headed towards, I think we are a few quarters away from overall profitability. That'll come. But every single line of business has grown while improving margins. And that's, I think, the best sign of good health.
By new, you mean new, N-E-U.
By new, I, at this point, mean the new lines of business that Tata 1mg has
I would
launched.
love to chat more, Prashant, with you. It's always such a fun to chat with you, but we are running out of time. So thanks a lot, everyone, and thanks a lot, Prashant.
Thank you.